Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So one of the products that we have to offer is what's called a reverse mortgage. Now there's a lot of misconceptions about reverse mortgages, like, oh, the bank will just, they're going to take my house and they own it and I have no rights, and you know what, they could sell it, or whatever the misconception is. So I'm going to go ahead and try to break this down as simply as possible to understand that's not the case at all. A lender will not take your house. A lender will not just, do whatever they want. You still have ownership of your property, everything. But let's go ahead and try to explain what a reverse mortgage is, kind of in the simplest form, to give you an idea of how it actually works. So like, for instance, let's just take your house, okay? Your house is worth $500,000. Now, your house is worth $500,000. Now, what the lender does is they split it up. So your $500,000, they'll say, okay, we're gonna go ahead and set aside $400,000 in the form of principal that is for you. Now, you could go ahead and use this however you like to. There's a couple of different ways you could go ahead and do it. The first one is going to be through installments. You could go ahead and take installments on this, which you get paid out every single month. Then you have the second version of it where you're able to go ahead and pull out any type of money that you want up to that limit whenever you decide to. So your $500,000 house will go ahead and for the sake of argument, we're going to kind of keep it as simple as possible. Your $500,000 house will be split $400,000 principal, that's money you could use, and then $100,000 in interest that they're gonna go ahead and keep, they're gonna set aside for themselves, okay? Now that we have the base platform of, okay, you have $400,000 that you could go ahead and spend, the $100,000 is gonna stay for the lender. Now, here's another misconception. That $100,000 is just set aside as a cushion. It is not meant for them. That is not gonna be what they're gonna just go ahead and take. No, that is only gonna be an amount that you go ahead and pull out of your house, which is in form of principal, right? So if you pull out $100,000, you only get charged with the whatever rate that we're at the very moment. We're currently in March. So, interest rates do fluctuate on a weekly basis, daily basis, and some cases even an hourly basis. So if you are interested, go ahead, link in the description below. I'll be more than happy to help you out. We do all types of different mortgages. We do also have up to 50% commission rebate if you are deciding to go ahead and purchase another house, a 0% listing fee, and we have a ton of mortgaging products that would be more than happy to help you out. But, so you have your principal. Your principal is the money that you could go ahead and use. Then what you have to also do is you have a little bit of the cushion in that $400,000 principal that you get to use. That is going to go for your closing costs, your title, your escrow, your appraisals, your credit fees, your origination fees, all the other fees associated with financing a property, right? So once you take those out, then you go ahead and let's say you take the installment route, right? You are going to go ahead and take money, or you're going to get money every single month from your creditor. Now, if you do it the other way, of course, you could just go in. It's like almost like what's called a home equity line of credit, which this is essentially a home equity line of credit, which is different because it's called the HECM. Then after we go ahead and take all the origination costs, all the escrow, title, and everything like that, then what we do is we allocate for any remaining balance liens that are against the property. So like, let's say for instance, you pulled out a home equity line of credit for 10, 15,000, whatever the number is, right? Then we go ahead and put that again towards the principal, because this is all the money that is for you, but we also have to go ahead and minus anything that you have set aside into the property, right? So if you have a home equity line of credit, if you have any type of liens against the house, whatever type of lien that it might be, we will go ahead and have to pay those off. So we get what's actually the true principal. So the interest is still set aside for the lender. Now, of course, I'm gonna keep reiterating this, that interest payment is not what they get. It is only what they allow you, or whatever you borrow against the house. So the interest payment will only go towards whatever dollar amount that we put towards the principal. So if you split it up, the interest is up here, the principal is down here. We are only gonna go ahead and pay interest. Even though $100,000 is set aside, it's not what they get. They only get whatever we pull out from below the principal. So the interest is set aside reserved for them. The principal is set aside from you. You have the $400,000 here. They have the $100,000 here. So if we're at $200,000, we only pay interest on the $200,000. So they take it from the little bit of the section that they have above here, the interest payments, that we go ahead and split it up between the principal and interest of the value of the home. And that is what we pay interest on. Now, of course, however you choose that you want to go ahead and do. So now that we have our principal and our interest split into two, right? That's a reserve up here, and then you have your reserve of your principal down here. Now, of course, you get to choose whatever you like to go ahead and do. Like I stated before, you could go ahead and do installments, or you could go ahead and do it like a home equity line of credit, where you go ahead and pull out money whenever you want. That money will go ahead and, if you want to do it once every 6 months, you want to do it once every 2 years, whatever you decide to do, that is going to be the money that's going to be readily available to you, that you're able to go ahead and get whenever you like to do. And that is the only amount that we're going to go ahead and be paying interest on, which is already set aside for the lender. Now, the other thing that majority of people ask is, hey, what that interest that's going to be accruing, is that something that I'm going to go ahead and have to pay? No, that's not something that you have to go ahead and pay right away. We already have that split into two. Your principal is going to be set aside for you. The interest is going to be set aside for the lender. So as it accrues, that is something that's eventually going to be for the lender. We already split it. We already have our reserves. Everything is set in its place. So we don't have to worry about paying interest right now. Now, another part of it is, hey, what happens if my house appreciates over the course of the time? Well, there's two parts, okay? So if you do installments, there will be more available to you. Now, the second part of this is going to be, hey, what happens if my house appreciates? Like everybody's been watching, we're in 2022, my house is appreciating. It is appreciated, let's say $100,000. Now my $500,000 house is now worth about $600,000. Well, that means, once again, it gets split to where you have more money readily available to you because you have appreciation. And then now that your house is appreciated, you have more money for yourself, and the lender has more money for themselves, which you have it in interest and you have it in principal. And then you also have something like, let's say for instance, and that's going to be on the installment side, right? So now you have more money available, and that's going to be installment for the longer period of time. So it kind of pushes it out a little bit more, right? You get more time. But if you do what's called a credit line, now if you do a credit line, you do have a credit line growth, right? A credit line growth, what does that mean? That just means that, okay, we're not at the $200,000 or the $500,000 value anymore. Your credit line growth is just going to go ahead and go with appreciation. So it's actually going to have more money available to you. Now that's only available in the credit line growth portion of it, not in the installment side, right? Only in the credit line portion, where more money will be available for you to take out whenever you want, because you're using it as like a big credit card, right? So you could take all of it at once if you wanted to. You could take it little by little, like, and as a credit card that you don't have to pay back, and you could just keep going as you'd like. So now that we've gone across the board on what the lender gets paid, now you know that the lender will go ahead and get the interest on the money borrowed. The principal, which is going to be the principal amount, is going to be available to you. Now what happens if, let's say, you go ahead and you want to either move, or you want to sell it, or you want to go, or God forbid, you pass away and your heirs want to go ahead and do any of the above, right? Does the lender get to take your house? No, absolutely not. I don't know where this came from. Well, maybe it was once upon a time, but in the 22 years that I've been in the mortgaging industry, reverse mortgages, the lender doesn't take your house. Now, if you sell the house, if you move, or if you do pass away, how much money is actually owed to the bank? The only thing that's owed is the money that was borrowed against the house. Nothing more, nothing less. You can't just say, okay, you're gone and the house is worth $600,000, so we're gonna go ahead and take the $600,000, and you only pulled out $100,000. So the only things that you would go ahead and pay at the end of that will be only the money that you borrowed. The origination fees, the title, the escrow, the fees associated with the origination part of it, how much money that you took out personally, the money that you took out, and the amount that accrued interest that was against the property. So however much that you ended up taking out, just go ahead and tack on that interest that's on it. Like any other type of mortgage out there, it's going to be the same thing. And if you go ahead and sell it, or you want to go ahead and do whatever you want to go ahead and do with it, yeah, they're not going to take the whole entire house. They're not going to do that. That's not how it works. I mean, there is, if you have no heirs to go ahead and leave the house, which that would happen regardless to anybody. You know, it would just be, that would just suck. That would be terrible. But yeah, no, the lender does not take the house. You only pay for what you owe, and then that's it. Then you could do whatever else you want to do after that. So if you say, you know what, I'm going to go ahead and move and sell this guy, yeah, go ahead and sell it. No big deal. Pay off the lender for the interest and the money that you borrowed, and then you call it a day. So in a nutshell, that's pretty much a reverse mortgage. And if you are interested in a reverse mortgage and you do need some assistance, or maybe you need a little bit more clarification, I hope that I explained this in a very simple way. Please link in the description below. Go ahead and let us know. All my contact information is there. I'll be more than happy to go ahead and assist you in your reverse mortgage. And for up to 50% commission rebate on your next purchase and 0% listing on selling your current home in the state of California. Link in the description below. Until next video, guys, I really appreciate you guys watching. Thank you very much. Please consider liking, subscribing, commenting, hitting that bell notification for any one of our other videos. And thank you.